Information shared on the following program is for general information purposes only. It does not constitute legal, tax, investment, or other advice, nor is it intended to recommend any particular investments, products, or financial instruments. Always seek advice from your financial advisor, attorney, or accountant with regard to investment, legal, or tax questions.
Welcome to the only show in the country dedicated to helping savers worry less about money, the Worry-Free Retirement, with your host, Tony Walker.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do. Them that have it, get more of it. The less they need it, the more they love it. And it sticks to them like glue. Funny, funny, funny what money can do.
Welcome to the Worry-Free Retirement, folks, and I am that little man in the sweater vest, 401k rollover specialist and fiduciary, Tony Walker. And if you're just now joining us, we've been in an advanced, deep dive into the subject of annuities. And in case you missed it, we do have former episodes of the show. Annuities 101 was recorded 3 weeks ago, Annuities 201 2 weeks ago, Annuities 301, which got a very, very deep dive into the differences between income riders and annuitization. That was really exciting stuff, I'm sure. And this week, we are holding an advanced, we call it the master's class on annuities. So we're excited to bring you this information. But before we get started, wanted to thank our own Aaron Orander, who's in the studio with us, along with his faithful sidekick, Megan Murphy. And they are not mic'd today because we stole Aaron's mic, and we have replaced that with someone much, much more knowledgeable and a little better looking, if I might add, than Aaron, our own, from Tony Walker Financial in Bowling Green, Kentucky. She's come all the way to Louisville, folks. Our own Heather Hughes. How are you doing, Heather?
I'm doing great, Tony. How are you today?
Doing well. You're really not doing well, are you?
I'm doing this for you.
Thank you. And I pay you well for this now, remember.
You do.
Okay,
You do.
All right. Yeah, this brings back memories when I asked you to be on radio, and of course we're going to be recording a TV show later. We were talking about the old days. Remember when I was on a large major network in Louisville?
Oh, yeah.
Live TV show. And what I would do, and I figured out I would ask you and Connie Fortney, who's in our office, been with me for years. You've been with me, what, 13 years?
13 plus.
Okay.
Yep.
So anyway, the show was always on a Monday. So on a Thursday, we close on Friday. So we'd close on Friday. So on Thursday, I'd say, oh, by the way, I'd be walking out the door usually. Heather, we'll be Skyping you. That means I'll be, we're coming on the live cameras on your computer. We'll be Skyping you Monday on the show if you don't mind. And I didn't realize how, describe to people what your weekend was like after I announced leaving the office on Thursday that you were going to be on live TV on Monday.
Oh, yeah. Total anxiety-filled weekend. So, you're just counting the days until D-Day, and then you're on live with TV. So then you changed it. So then you wouldn't tell us on Thursdays. And then we'd get the dreaded phone call on the way to work on Monday morning. Oh, by the way, you're going to be on live TV this morning. So
yeah, and then you go,
save
what
the
are we
weekend,
gonna,
but
yeah, and then you say, what are we going to be talking about? So don't worry about it. We'll figure it out. But not telling people about when they're going to be on TV reminds me. I have a friend who has a really good friend. They used to play golf together a lot. Still play some, but what would happen is the one friend was always late for the tee times. So my friend would call, get the tee time. This guy was always late. And so he figured out, he goes, wait a minute, I'm going to lie about the tee time. So he would actually tell him the wrong tee time, knowing he would show up late, but he would end up showing up on time.
Right.
The funny part of the story is his friend found out that he was lying about the tee time, so his friend would call ahead to the pro shop, confirm the real tee time, and still show up late. So it was just a strange thing. I don't know if the guy was nervous about getting off on the tee times or what the problem was, but we appreciate you being here, seriously. And the reason, folks, we've got Heather on, we've got a unique operation at Tony Walker Financial, particularly when it comes to annuities. So the reason we're holding a master's class today, incidentally, Aaron, and you're okay to shout this out if I'm wrong on this, but all the 3 prior episodes, both radio and TV, tell me if I'm wrong, they can go to TonyWalkerFinancial.com There they can listen to former radio. The podcast is on there of the former radio shows. Is that correct?
Yeah, Tony. So people can go to TonyWalkerFinancial.com, scroll all the way down until they see the bobblehead, click on that, and that will take them to our SoundCloud page where they can listen to past episodes.
So that would really be good for you folks if you have time to go back and listen, starting with Annuities 101, then 201, then 301, because it's going to lead up to what we're talking about in our advanced class. Now, you might say, Tony, I've never heard so much information on annuities. Why are you covering this in so much detail? Because, folks, annuities, and I admit it, and you would admit this too, they are pretty complicated. Wouldn't you agree?
Absolutely, yeah.
But as we always say in the office, that doesn't mean you shouldn't take time to understand them, and that's our job. So we'll have people, and that's what we're going to share. I want Heather to share a lot of what she experiences with our clients, the work she does at our office to make sure we're finding the proper annuities for the folks. But, tell us, well, first, let's do this. Let's back up just a minute before we take a break here in a second and really do our deep dive. What I want you to share with people, first of all, is how you even discovered Tony Walker Financial, how long you've been with Tony Walker Financial, and how your role at our offices has kind of evolved over the last 13 years.
Well, sure. Like you said, it was a little over 13 years ago. Answered an ad in the paper, which, who looks for a job like that anymore?
At the time, we needed a fry cook, too. I'm
yeah,
surprised
well,
you applied for
there
that.
you go. And you were looking for, I think, financial research coordinator. Does that sound right?
That sounds good enough.
Okay, yeah. And me not knowing what that was, I was like, sure, I'll try that. Had a background in accounting, and I think that was kind of one of the prerequisites, is you wanted somebody with an accounting background. Hired me. I'd been out of the workforce for a few years, stay home with the kids, but it was kind of, I think you'd mentioned, okay, part-time work, and I'm like, okay, this sounds like a pretty good gig for me. So show up, first couple of weeks, I'm looking around, what does he want me to do? And then it just kind of evolved from there. I think first I was researching some tax issues on clients, and then we kind of started working about, let's put together income plans. Let's show clients how they can use their money in retirement.
And you helped develop those first pages. Remember
right,
that? The
yeah,
spreadsheets
we did those
things
pages
you'd
all
fold
by.
out, looked like an accordion.
They did. They were all on Excel spreadsheets, and they could be 20 inches long going across because we were putting in so much information. And that evolved to developing our proprietary software, which has been a godsend for me.
Yeah.
And I think for our clients as well. And, from there, I really got kind of a passion for planning and helping people with their money. And finally, did some studying and actually became a fiduciary like you. So.
Mm-hmm. So, yeah, and as you've watched our practice evolve, and especially with annuities, and again, we're not here to bash other people selling annuities. I'm sure there's some fine people out there. But what have you noticed in terms of our approach to annuities and the due diligence we put in? We're going to show them that in the next segment and talk about what all you do to find the proper annuities. But what would you say to the average person out there that maybe has an annuity, thinking about buying an annuity, has listened to this show, has some interest, or maybe even been to a dinner seminar, about just kind of a cautionary tale of here's why you want to make sure you really understand what you're getting into? How would you summarize all that?
Well, annuities are very complicated products. And my big cautionary thing when clients call or potential clients call is one annuity does not fit all. So you really need to look at your individual situation or have somebody who knows what they're talking about look at your situation to determine what is the best product for you. And there are so many annuities out there, so many insurance companies that offer them. So you really have to do some due diligence, at least if you can't have an advisor that can, to see what would be the best product for you.
And you mentioned something earlier I think is really key, Heather, and I think you've realized that, first of all, I was so thankful that you were able to work on all those spreadsheets. And then, we even talked, I said, Heather, we've got to get away from these and create some software, which was tough, but we finally did it.
Right.
But speak also to the importance of why you need the plan first and then the annuities and the problems we see when people rush out and buy an annuity without a plan. So kind of speak to that whole issue of what our income software is for, what we're trying to think through before we actually select the annuity.
Right. So we're looking end goal in mind. So we're looking, what's this client going to need in retirement? How can we furnish those funds to them? A lot of times people will be talked into buying an annuity, not really knowing what they get, and it's actually not going to serve the purpose that they need. Either it's not going to provide enough income, it's not going to, they can't access the money the way they thought they could. There's lots of little nuances within these annuities that if you don't know about, it may not be the right fit for you.
Yeah, and speaking of the nuances, I think when we come back, let's do this, because I know you've worked on some spreadsheets, and through the magic of radio, our audience won't be able to see this, but when we come back, I want you to describe, and this is one of many roles you play at Tony Walker Financial, but how the industry is quickly changing because of these bond yields. We've talked about this on a prior show. And all that you go through to look at these different annuities and why it is so important to have a fiduciary that is actually working with you on the annuity. So you're going to stay, well, you have to stay around. You can't go anywhere. So
no, you got me hostage here.
Okay, all right, we'll be right back, folks. You're listening to Worry Free Retirement. Good stuff coming up. We'll be right back.
With 401k plans at all-time highs, why continue to risk your hard-earned money? There's a safer way to retire worry-free. Attend nationally recognized retirement specialist Tony Walker's next free workshop, Retirement 101, December 9th in Louisville, December 10th in E-Town, and December 12th in Bowling Green. These workshops are free, but seating is limited, so register today at TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
And now it's time for Tony in the Trenches.
All right, our Tony in the Trenches, and normally it's to Tony, but since they didn't know you were going to be on the show, Heather, I'm actually going to address this question to you. It says, Tony, I watched one of your previous shows on TV. Like I said, folks, we do have a TV show as well, and if you want to check out the times to the TV show, just go to TonyWalkerFinancial.com. And we've got all those shows listed. We're actually in 7 stations now throughout Kentucky. Pretty impressive, yeah. So it's pretty cool. And as you're going to see in a minute, we're going to go over some information. Graphically, the TV show can really help you a lot more. So just be aware of that. But one of the prior episodes, the question is, Tony, you covered very little on the difference between annuitization and income, these income riders, and they wanted to know about taxes. So ironically, what are we going to talk about the last segment, if you want to address that very briefly, Heather, and the issue of taxes?
Very timely. So last segment, we're going to talk about how annuities income is taxed. And it depends on whether it's qualified or non-qualified funds, how the IRS treats it. It's nothing we've come up with. We're kind of following IRS protocols here. But yeah, we'll get into that in a deeper dive.
That'd be great. So this segment, what we want to do, folks, if you're just now joining us, so we have Heather Hughes, who's also a fiduciary in the office. Incidentally, I think our model's pretty cool. Now, I mean, I know we're not the only game in town, but we do pretty well in the area of annuities. Since 9/11, I've been kind of known around the country. In fact, people kid with me. Some of my peers call me the annuity king. But we've written, through our efforts, obviously I got a great staff, but over $350 million in premium of annuities. That's a lot of premium since 9/11. Last year alone, the fiscal year that we use, we did right at $47 million. We have over 2,200 annuities. So when we say we're pretty much an authority on annuities, we mean it. I mean, we've really put a lot of time into this. And I think one reason people trust us so much, Heather, is they know that we're trying to do the due diligence. So where I'm different than a lot of firms, and again, there's nothing wrong with those models, what a lot of firms will do, and you've seen this, Heather, they hire, I call them the hired guns. So they send all these people out to sell annuities, then the firm starts collecting more and more annuity premium, but then the people have questions or they're trying to look at different annuities or game plans, and there's really nobody there to service it. So what I've done is Heather is full-time in our office. Again, she's a fiduciary, and your role is to make sure on the front end we're selecting the right annuities, but also to service those people when they call with annuity questions. So let's twofold here. First of all, what do you go through when we're selecting annuities for a brand new client or a prospective client? They come in, we're getting ready to do a game plan, and I know folks you can't see this, but this is called our annuity grid. Kind of go through this and explain to the people how involved this is when we're helping them select annuities.
Sure. So, one, it's a constant job to keep on top of what annuity companies are offering, their rates. It's a constantly changing field, mainly because, I think you've mentioned in previous shows, bond yields are down, so annuity companies have to adjust those rates down as well.
And they really are dropping quite a bit, aren't they?
They are.
I know one of our major companies has dropped the rates quite a bit, right? I mean, it's...
Right.
Yeah.
And so, part of my job at Tony Walker Financial is to stay on top of what is being offered by annuity companies. And we only use A- rated or better companies. So, there are other companies out there, but we want to have the security that the products we're offering are backed by really solid companies. So that's one, criteria that we use. Really depends on what we're looking for as far as what do we want the annuity to do for the client. So some annuities are just purely accumulation products. They're not really going to use these for lifetime income.
Yeah, let me stop you there. So an accumulation product, give me an example of where somebody might want us to research just an accumulation product.
Sure. So let's say that their income is in retirement. Maybe they're already retired. They've got a good pension. They've got good Social Security. They're really not needing the retirement funds to live off of from a day-to-day basis, for a monthly, to meet their monthly expenses. So really they may just want to grow those funds and not really touch them, or maybe just touch them for required minimum distributions, which I know is a whole nother conversation. Then we're really looking at what's going to be the best crediting factors and what's going to give them the biggest growth potential. So that's one type of annuity.
And maybe no fees, right? Because some of these riders come with pretty high fees.
And that's one thing we always look at too, is we're trying to minimize costs on money anyway. So we're looking at fees there. If it's a client that is really going to need to use their 401k, IRAs, retirement accounts for monthly supplemental income in retirement, then we're really probably looking at like an income product. So we're looking at something that has an income rider. It's going to have good payouts. We want good guarantees on that. Whether they're single or if they're married, we want some joint income that the spouse will be able to rely on too if the client predeceases the spouse. A lot of things like that are factoring into it. Other products that we're looking at, maybe some just guaranteed growth. So we have a lot of people that are former CD clients and they just want that guaranteed rate. So we've got calculators and some software that will just immediately tell us what the best rates are for somebody that just wants a fixed rate on a 3 to 5 year, what's called a MIGA. So
yeah, and I think you've seen that too. My father-in-law, I kind of remind the office sometimes, I've started this business in 1984. My father-in-law owned a property casualty firm, and he always told me when I first started, he was an independent insurance agent. He said, Tony, as best you can, always remain independent because insurance companies will change, and you've seen that in the last 13 years, haven't you? So it is kind of nice to be able to go to all the companies. We have a plethora of companies, but just be able to know, hey, you know what? We've got a lot of flexibility here to research and try to find the best product for the client, which is what a fiduciary is supposed to do, right?
Right. Unlike captive agents, they're stuck selling whatever they're tied to by their employer. Being self-employed like this, you don't have to do that. And typically I'm looking at probably 20 to 25 companies on a weekly basis just to see what the best product offerings are.
What are some of I'm catching you off guard a little bit here, but what are some of the typical questions you get from clients who have been with us for several years, and then when they get into this, okay, I think I'm ready for income now, or I like to call it mailbox money. Are they kind of surprised when they start getting these checks? I mean, it's almost like the reality is like, I'm really going to get this check for the rest of my life? Kind of go through the typical thing, because you're so much face-to-face with a lot of these folks.
I think the funny thing is they're surprised that it's actually what we told them it was going to be. And they're like, oh, this is really working out. The income. And it's like, oh, this plan actually is playing out the way we laid it out. And we still, in our planning, we still have the ability to tweak things because, life happens and we just don't know, curveballs get thrown people's way. We can adjust for that. But a lot of them are like, I can do this. You're going to send me money now. And it's like, absolutely. So that's what it's there for, And unlike brokers that are probably going to be like, are you sure you want to take that out? We're like, here it comes, give us your checking account because we're going to do a direct deposit for you. So they love that.
And as I like to say, we like to eat our own cooking. I mean, I know people talk about, well, Tony, you seem to really push these annuities and all the income and everything. Are you really going to encourage me to take the money? What have you seen from our clients as they get older? And the philosophy that we have is a little different, that I really do believe in spending and enjoying your money while you can. Kind of speak to that a little bit about how we encourage people to use and enjoy the money a little bit here.
Oh, yeah, absolutely. One of my biggest joys is when I'm talking to clients, I'll ask them, so what have you been doing lately? And we hear a lot of travel, a lot of cruises, a lot of trips to Disney with the grandkids, and they're just thrilled to be able to do that. And then others are, hey, I've bought a camper. I'm going to go to Florida for 3 months.
You know who's a happy camper? The guy leaving the campsite.
Not my thing, but absolutely, if they're all about it. And, some just like the fact that I don't have to get up and go to work every morning. I'm living a simple life. I'm sitting on the front porch drinking my coffee every morning, and I'm happy for it. So.
And the next thing, before we'll take another break here in a second, because I want to get to the taxation of annuities, but speak to some of the horror stories we've seen. Maybe give an example of someone who rushed out, bought an annuity. They found out maybe it wasn't what they thought, or they don't understand it, or now that the agent that sold it to them, they can't even locate them. What is the, again, warning shot over the bow to people out there before they just rush out and buy an annuity, regardless of how they found out about this? What would you say to that? How would you speak to them?
I really don't think you need to buy an annuity without a plan. We've really tried to help some that have purchased an annuity from another agent and didn't know what they had. Some of these are what we'd call two-tier products. They're not offered as much anymore, but a lot of people didn't realize they couldn't take all of their money out without taking it in annuitized segment. Yes, yeah.
Which they may not want to do. That's the
problem. Right.
Yeah.
And and again, so it's buying something that you don't know is going to fit your needs. Mm-hmm. So.
Well, good stuff. Well, speaking of fitting your needs, we've got to get to the taxation of annuities because a lot of misconceptions there. So when we come back, folks, our own Heather Hughes, our fellow fiduciary in the Bowling Green office, we're going to go over the taxation of something called a non-qualified annuity. Really important stuff because the industry, our friends at the insurance companies, have made a big deal about tax deferred and why that's such a great deal. And on the one hand, you better understand tax deferred, right? Because it can come back to bite you. You're listening to The Worry-Free Retirement. We'll be right back.
With 401k plans at all-time highs, why continue to risk your hard-earned money? There's a safer way to retire worry-free. Attend nationally recognized retirement specialist Tony Walker's next free workshop, Retirement 101, December 9th in Louisville, December 10th in E-Town, and December 12th in Bowling Green. These workshops are free, but seating is limited, so register today at TonyWalkerFinancial.com. That's TonyWalkerFinancial.com.
Welcome back to the Worry-Free Retirement. You're listening in on the Annuities Masterclass, and we are taking an even deeper dive with our own Heather Hughes, who is located in the Bowling Green office. Incidentally, if you're listening to this and want to read up a great booklet on annuities, is the Annuity Decision Guide for Savers. You can download a free copy of that. Just go to TonyWalkerFinancial.com. In the space bar, just type in downloads. And that is a great little booklet. I know people have commented to you, Heather, that have read that booklet and say, man, this is one of the best booklets on annuities. And I said, well, that's because we wrote it. I mean, we work with these products daily. Many of you folks are on the internet, you're listening to the radio, and people are giving you what I think is false information. Well, a lot of these people don't know. They don't work with annuities. I don't get that. But anyway, I'll get off my high horse in the essence of time. All right, we're setting the stage now. So we've always heard annuities are tax deferred, which is true. Now, again, we're going to set the stage. We're assuming money has already been taxed. We're not talking about a 401k here, folks. That's different taxation. But, we have a lot of people that come to us. Maybe they've received an inheritance. Maybe they've paid taxes on money and have been putting it in the bank all these years. So we're going to use an example that someone comes into us. Let's just say we'll go back in reverse. 10 years ago, and they invested $100,000 and we put it in a tax-deferred annuity. You with me, Heather?
I am.
Okay. And now over the years, whatever interest rate, we're just picking these numbers out of the air, it's grown to $200,000. Nice little gain. And they say, well, you know what? I think I want my money. So can I just liquidate the annuity? So let's stop right there. If they were to take, and I know you've got this written down. By the way, folks, on the TV show, we're going to put this, we've already graphically put this up. This is great. You can go to our YouTube channel. All right, type in Tony Walker Financial, And we are going to put this on the TV show, but more graphically so you can see what we're talking about. So we're kind of having condensed this. So in this example, Heather, let's imagine, all right, they're just going to take it out and just spend the money. And you've kind of done a few things here, because remember, this is income planning, folks. How does this annuity, how's it not only going to be taxed, but how's it going to affect other income? So kind of walk through this first column you have here.
Sure. So I started off, in this example, looking at a couple, age 65, both of them, receiving IRA distributions of $30,000, Social Security combined between the two of them, $40,000. And that was it before they liquidated the annuity.
So not a lot of taxes, really.
Not a lot of taxes. So really, of that $40,000 in Social Security, about $11,000 of it's considered taxable. And so taxable income after your standard deduction, you're looking at about $16,000. That puts them in about the 10% tax bracket. Mm-hmm. And so their tax liability would be about $1,600 for the year. Not bad.
That's pretty low. Okay, so but they wanted to liquidate this annuity. It was tax deferred. So granted, they didn't have any taxes on it, but now let's imagine and remember, folks, this is a non-qualified annuity. It's not in a 401k. That's for another TV show. But go ahead. What happens now tax-wise?
So when you liquidate, taking a lump sum, a non-qualified annuity that has a gain, the gain is considered taxable. But unlike capital gains, it's considered taxable at income tax rates, not
ordinary rates, right?
Ordinary income tax rates.
Which can be high.
Correct. Mm-hmm. So in this example, if they liquidate that annuity, they're getting a check for $200,000. That's great. But $100,000 is going to go on their tax return as ordinary taxable income. And so, yes, you're going to have to pay taxes on that. But it also has another effect. So where Social Security was only taxed at about $11,000 prior to this, $34,000 is going to be considered of their Social Security is going to be considered taxable.
So let's stop there a minute. So folks, this is why you better purchase annuities from people that are retirement planning specialists and understand taxes. So if somebody didn't know that, we haven't even gotten the taxes on the annuity. They just really messed up their Social Security, right?
Right.
Okay, keep going.
Yeah, I mean, they're still receiving the same Social Security, but it's costing you some money.
That's right.
So given that, nothing else changes. So their Social Security is the same, the IRA distribution is the same. So they haven't changed their income at all, but their tax liability has gone up tremendously. So where they're in the 10% tax bracket prior to liquidating the annuity, bumps them into the 22% tax bracket now. Tax liability of about $22,000. So you went from about $1,600 to $22,000.
We worked on this with a project recently where somebody had quite a bit of non-qualified money, and we did a staggered annuity approach, which was pretty sophisticated. But talk about the way to take that, I call it a tax tumor, and with a non-qualified annuity, the law gives us some advantages there to spread that tax out. So let's go to option B here.
Absolutely. So all is not lost. So let's say you still have that annuity, you've got the $100,000 gain. You can take it out over time, what's called an annuitization. And with a non-qualified annuity, the IRS code has something what's called an exclusion ratio. So what that means, it's going to spread the tax out over the period of time you receive the annuity. So in this instance, I think the exclusion ratio was 46.3%, which means 46% of each payment is considered excluded from taxes because it's a return of principal. So if this case, instead of receiving that full $100,000 that first year, we're going to spread it out over a term. So instead they'd receive $21,600, but only about $11,600 would be considered taxable in that tax year, which would keep their taxable income right at the 12% tax bracket. So taxes on that would be about $4,100 for the year. Huge difference from the $22,000.
So folks, as you can see, there are so many things we have to offer at Tony Walker Financial, and all these services we're talking about here, everything Heather has been talking about, if you're a client or a serious prospective client wanting to do business with us, absolutely free, no charge. And I think that's the point. If you own an annuity or if you're thinking about buying an annuity, for goodness sakes, before you sign on the dotted line, please reach out to us for a second opinion. As Heather said, make sure you have a game plan. We'll be happy to put a free game plan together, no cost or obligation. Take advantage of meeting us. We're one of the most experienced annuity providers in the country. We know these products well, and we would encourage you to go to TonyWalkerFinancial.com. All you got to do is click on the Let's Get Started button. We'll be happy to talk to you in either our Bowling Green, Louisville, or Lexington, Kentucky offices. Do it today. Do it now. It's absolutely free. Log on to TonyWalkerFinancial.com. Well, that concludes our sessions on annuities. Next week, we're going to come back with an interesting concept of how do you monitor your progress to make sure that, assuming you do have a game plan, you're on course for a worry-free retirement. Thanks for joining us. We'll see you next week on the Worry-Free Retirement.
If you got it, you don't need it. If you need it, you don't got it. You don't get it, shame on you. Funny, funny, funny what money can do.